I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming, and they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it, but for example, companies didn't really have the guts to follow Michael Saylor into Bitcoin corporate treasury. We didn't see any Bitcoin ETFs, and so this cycle, assuming that some of these Bitcoin ETFs get approved, and again these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was. I think you could have more normalization among institutions and actually have not just narratives about it, but actually allocations.
Prominent hedge fund manager and Morgan Creek Capital founder, Mark Yusko, expresses strong optimism about Bitcoin and other major cryptocurrencies. He anticipates a bullish trend, particularly during what he terms crypto summer, a phase characterized by a stable recovery following crypto spring and preceding the significant parabolic movements of crypto fall. According to Yusko, Bitcoin's current fair value stands at approximately $50,000 per coin. Yusko describes the ongoing rally as the initial ascent towards fair value, with the momentum building steadily during the musings of summer. He estimates that crypto summer will conclude by June 2024, coinciding with the Bitcoin halving event. Yusko predicts this event to propel Bitcoin's value from $50,000 to $100,000 per coin, constituting a pivotal and extremely bullish development. He envisions the ongoing rally reaching the fair value of $50,000 and a halving event further doubling it to $100,000 per coin around mid-2024. Looking ahead, Yusko envisions the commencement of what he terms crypto fall around mid-2024. During this phase, he anticipates substantial parabolic movements, catapulting the leading crypto asset from $100,000 to at least $200,000 per coin by mid-2025.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
If you see how traditional pools of capital treat gold over decades, so multiple studies show that if you add a slice of gold to an otherwise stock bond portfolio, the risk-adjusted returns of that portfolio are better. And that's because gold tends to do well in decades where neither stocks nor bonds do particularly well. So the 1970s, the 2000s, for example, it's that non-correlated asset, or it's a differently correlated asset, and having that rebalancing slice in your portfolio was helpful, even though that was not very accepted in traditional pools of capital, even after decades, right? And so there are kind of these things that are on the periphery that they're the whole point is outside money, right? And so even if it's sometimes outside money that's encased in an inside wrapper, there's still kind of skepticism about it. So I think that somewhat tempers it, but I do think you're right that so this past cycle was about macro. I think the next cycle, there's kind of two things I'm kind of looking at. One is I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming, and they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it, but for example, companies didn't really have the guts to follow Michael Saylor into Bitcoin corporate treasury. We didn't see any Bitcoin ETFs, and so this cycle, assuming that some of these Bitcoin ETFs get approved, and again these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was. I think you could have more normalization among institutions and actually have not just narratives about it, but actually allocations. And so I think that's one. Number two is I think for me the more optimistic one is the rise of these little Bitcoin hubs. And so Bitcoin Beach is an obvious early example, but there's Bitcoin Jungle, there's Bitcoin Lake, there's Bitcoin Akasi. I'm probably pronouncing that wrong. I always see written rather than there's I think 2 years running the Bitcoin Indonesia conference, run by a woman named Dia. There's 2 years running the Africa Bitcoin conference with Frida and others, and they basically these little recurring hubs around the world and in some of the markets where it's most important. That I think is more powerful than even things like the Bitcoin Commons, Bitcoin Park, Real Bedford, PubKey. These kind of locations within developed countries that are kind of these recurring, Bitcoin hubs. I expect over the next cycle, those to reach more critical mass. So this cycle was like the cycle of like those coming into existence, or at least after the initial few, there's been a spread of those. I actually did a podcast with Kathy Wood the other day, and they like track this, and they kind of have like this number of how many of these little hubs that they're noticing, and it's like a crazy number per quarter. Most of them don't reach necessarily the awareness of the ones I mentioned, but there's a lot of these. And if you fast forward 4 years, I expect these to be much bigger and more numerous. And that's in my view one of the healthiest things if that occurs. That'd be one of the healthiest types of cycles.
Yeah, I love that.
So that's I think the other half of the coin. It's institutional liquidity. Institutional capital is good because it can add liquidity to the Bitcoin network and take some of the edge off of volatility potentially. Like that kind of rebalancing effect from portfolios and big pools of capital, and widen the ownership to varying degrees. That's healthy for liquidity and volatility. But I think a better thing is the actual self-custodial or community custodial hubs that are popping up. I think that's more important.
Cryptocurrency's 4-year cycles follow a distinct structure, comprised of 4 periods that govern both price movements and the overall market conditions. According to Marusco, the recent crypto winter, characterized by extreme volatility, extended from June 2021 to June 2022. The subsequent crypto spring, commencing in June 2022, marked a slow industry recovery, briefly disrupted by external factors such as Hurricane Sam in June 2023. The transition to crypto summer occurred with significant momentum when BlackRock, the world's largest asset manager, announced its application for a spot Bitcoin exchange-traded fund in June 2023. Yusko emphasizes that summer is not a straightforward ascent but a period of steady meandering towards fair value, signaling the beginning of a bull market. As we approach fair value, Yusko predicts increased activity in the crypto space, with traders and speculators actively participating. Looking forward, Yusko anticipates a surge in activity as we approach the fall.
There are a lot of people doing the work to kind of argue that Bitcoin is like halal money. Like it's the fiat currency is based on riba. It's based on interest rates. It's based on credit. It's based on things that some interpretations of religions would prohibit, and Bitcoin is more in line with how those places view money. And so I do think that the Middle East in general, really could catch on to Bitcoin. I don't know if it'll happen next cycle. I'd like to see it happen, but I do think in general these hubs are going to pop up around the world. What I mentioned before is basically the hubs, Bitcoin hubs spreading around the world, and therefore any technology that empowers them, anything that allows them.
Ethereum.
Yeah, exactly. And anything that helps that. So anything that allows communities to set up their own custody, anything that allows them to build their own custody solution, build their own wallets, get liquidity, deal with scaling in a high fee environment. The worst case scenario would be, that all these hubs arise and all their Bitcoins held by Binance or held by custodian XYZ, right? Some gigantic, multi-billion-dollar honeypot outside of their borders, outside of their community. It's much healthier, I think, to distribute that, empower communities as much as possible to be able to hold their own Bitcoin. And so custody is not entirely a Boolean thing of like the person custodies it, or there's two extremes. Like there's you custody it, which it's not extreme, but it's one end of the spectrum is you custody it yourself. The other end is it's all into one gigantic shared honeypot. And then there's the spectrum on there is, okay, if some people you want to encourage as much as possible to self custody if they can hold it, if they can deal with the fees, if they have that long enough time to be able to deal with that. But if you want to have something in the middle, is at least distribute that custody away from these gigantic pools and closer to their own community, ideally in their own community. So I think that's important. I think anything that makes Lightning more solid is good. We'll see what happens with things like soft forks covenants to see if there's other scaling solutions, or even just things don't require forks. And any sort of promising scaling things that just make interacting with Bitcoin easier to do and cheaper to do and more efficient, while preserving as much of the ethos as possible. So it's really about those hubs, and then about empowering those hubs, because Bitcoin has to win not just on its hardness, but on its, what is the user experience of someone who comes to Bitcoin? What is it like for them to use the asset? And so I think that it's gotten way better. Like I really liked, for example, the tap sign or nunchuck combination.
Yeah.
And I'm not an investor in either of those. But that's an example, I think, of a good sweet spot for UX, especially for smaller amounts. And so I'm looking forward to see more of these kind of hybrid solutions that, say, how can we get UTXOs spread out more? How can we get custody closer, at least closer to the person, and allow them kind of experience Bitcoin as it's meant to be?
Market participants are abuzz with anticipation as major asset management firms race to secure regulatory approval for the first ever spot Bitcoin exchange-traded funds in the U.S. Applicants such as BlackRock, VanEck, Valkyrie, Bitwise, Invesco, Fidelity, WisdomTree, and ARK Invest, in collaboration with 21 Shares, have submitted revised filings with the U.S. Securities and Exchange Commission on Friday. The initial deadline for the proposed spot Bitcoin ETF by ARK Invest and 21 Shares is January 10th, and many expect the SEC to greenlight multiple spot Bitcoin ETFs by that date. Fee structures are also taking shape, with Valkyrie announcing a 0.8% management fee, aligning with ARK and 21 Shares' proposed rate. Fidelity aims to undercut the competition with a remarkably low 0.39% fee for its Wise Origin Bitcoin fund, while Invesco offers a 0.59% fee with a 6-month waiver for the first $5 billion in assets. Bitwise, in its Friday filing, disclosed plans to seed its spot Bitcoin ETF with $200 million, and BlackRock recently revealed its intention to seed its ETF with $10 million on January 3. Despite JP Morgan CEO Jamie Dimon's consistently negative stance, the world's largest asset manager has named JP Morgan as a lead authorized participant. The question remains, will the SEC approve spot Bitcoin ETFs ahead of the January 10th deadline? Share your thoughts in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.